great. So we're with Sharma's group today. I just want to introduce you to some of these guys and Sharma, if you haven't met her yet.
How's it going, everybody?
Good, everyone.
Hey, good morning, guys. How you doing? It's a pleasure to meet y'all.
Thank you.
All right.
The
So
first of many, eh? The first of many.
Oh yeah.
Yep.
Amen. We're finally back at 156 on DJ over here.
Mm-hmm.
So we're finally live, you guys, on YouTube. So we're gonna be live on SharmaFX YouTube, and the same thing's gonna be posted on Stefanos group as well. So see you guys on YouTube. There's probably people waiting on Instagram. I'm sorry if that was all.
I know. I can't believe that. Reese, you all good? Having some difficulties?
We're all good.
Oh. All right.
All right, we got people coming in.
Beautiful. On YouTube?
Yep.
Good stuff.
All right, so shall we go ahead and get started?
Yes.
All right, let's do this. So I usually start off from the fundamentals, so from Bloomberg and things like that. So I haven't picked much from the US side because I want to save something to show people, pretty much like how do I pick which articles to kind of look at and go that way. But I go through like every session pretty much here on Bloomberg. So you have I go through Asian, Europe, and US instead of the rest. So this is Asian right here. So we know Evergrande. We talked about Evergrande in one of our outlooks a couple of weeks ago. So that still hasn't gone anywhere, right? So that's still around. If anything, they have amassed billions in dividends before the crisis. So up until this point, what we have been seeing is the Evergrande crisis having this rippling effect on the rest of the property developers and the real estate professionals in China, right? So a lot of those real estate professionals and companies starting to get hit, and also a lot of companies being bought out, and you're seeing all of this going down as a rippling effect of whatever happened in Evergrande.
There's a let me actually send this into the chat.
Yeah.
And if you want to send it to YouTube, you can. But there's a great breakdown of what exactly happened and what's happening now with Evergrande. Somebody posted it on TradingView. Here we go. I'm going to send this into the group right now.
Yep.
If you guys aren't really understanding what's going on with Evergrande and you hear a lot of people talking about it, this in the chat is a great breakdown of it. If you just scroll down, yeah, you got all that, and then it's like, what's the problem? Who's Evergrande? Evergrande's debt, anatomy of a market crash, who it's going to affect, all that stuff. So this is whoever did this was pretty good. I forget where I found it.
Yeah, so I'm actually going to go ahead and put this in the YouTube chat. So if you're interested, go ahead and just click on the link, copy, paste it.
Guys, it takes like 5-10 minutes to just run through. Well worth it, especially with what this can affect in the world. So it's good to really be caught up and understand what's going on here.
Yep. Give me 1 second here.
What do we got in here? Guys on YouTube, I appreciate you guys showing up and seeing what we got going on over here. It's our first one, so we're breaking it in. We got Gary in here. What's up, Gary? Minutes to just run through.
Morning, everybody.
How you doing, buddy?
What's up?
Not too bad.
All right, yeah. So it's in the YouTube chat. If you guys want to go ahead and take a look.
Michael Wang.
So still, what's going on is they're still on that edge of, or on the brink of that default. And so, give me 1 second here. Let me turn on this light here real quick. All right, there we go. Yeah, so they're still struggling to meet their obligations to creditors, suppliers, and homeowners. Authorities in Beijing are urging. This is Evergrande's Huey. I guess is that how you're gonna pronounce it?
Yeah.
Yeah. So pretty much the whole point is there's still this whole default is still going on right now. So that entire issue is still happening, and a lot of companies, a lot of businesses, they're still getting affected by this entire issue. So a lot of these issues that we have discussed in our previous breakdowns or in our previous weekly outlooks, they're still here. They haven't really, like, nothing has changed. When we talk about COVID, that entire issue is still there. When we talk about this entire Evergrande issue is still there. When we talk about inflation, unemployment, all of those things are still happening, even though we've seen this started developing like months ago, right? So none of these things have really gone away anywhere, and this is still affecting a lot of. This specific event is affecting a lot of Asian countries as well. So, yeah, so the Japanese.
Australia too.
Yeah.
Australia
Absolutely.
has, I want to say, 90 or 95% of a social security fund tied into Evergrande.
Mm-hmm.
So,
Yeah.
obviously, that's not too good.
Exactly. And so yeah, that's the reason why it's having this rippling effect, because there are so many people who are invested into this. So if you guys want to go ahead and continue reading more, they're talking about further into Evergrande, how much it has paid to his bond holders last week, and all this information. So you can go ahead and take a look at this article right here. All right, and let's go ahead and move on to the next one. You guys have any questions about this? All right. So today is the annual budget release for the UK. So I don't think they've put out a time just yet. Yeah, there's no time just yet. But this is important because as of yesterday, the developments that we have had so far is that the businesses are requesting the chancellor in the UK to pretty much put in some more investments. So he speaks 12:30 p.m. London time. There you go. So 12:30 p.m. London time. You want to be paying attention what's going on. And so the businesses have asked him for more investments in businesses because again the economy is super weak there. The cases are increasing, the COVID cases, and that's leading to that potential discussion of further restrictions. Things just started opening up on the international level. International travel just started opening up. The UK was one of the leading countries to open up their economy, where on the federal level they were saying like you don't have to socially distance anymore, you don't have to wear a mask and these type of things, but they were still implementing all of that on the local level. So if you're going into London, the London's mayor is saying, well, it doesn't matter what they're saying federally. On the local level, if you're traveling on our public transportations, you have to wear a mask. You have to follow these restrictions, right? So all of those things just started developing. You just started seeing some optimism kicking in, right? And then now you start to see COVID cases increasing all over again, and this is a result of easing those restrictions, where as international travel was opening up, they were saying, hey, now we're, if you guys remember that traffic light system that they had, where there were countries that were in the green zone, they're like, well, if you go here or you're coming back from here, you don't have to quarantine, or you don't have to show us like a negative, positive, whatever of your COVID test. Right, there were certain restrictions. If you were in green, if you were in that yellow or the amber, or if you were in red, which was like, well, if you come back from here, you're gonna have to quarantine. You're gonna have to do all these different things, and so we started to see that easing up. We started to see a lot of those countries moving from the red into the amber and then into the green, and you saw majority of international travel being pretty open, where you didn't have to show negative. You didn't have to show negative COVID test, or you didn't have to quarantine for 10 days or 14 days. So as you start to ease up some of these restrictions, some of that might have been backed by, the medical data that we have been seeing, and some of it must have been because obviously for to boost up some more international travel and boost up that airline industry, if that makes sense for you guys so far.
Mm-hmm.
And so a lot of these cases are a result of easing such restrictions. So that's just one example. But there have been other restrictions that we have been seeing that they have been easing up. And so now this is going to be important to see whether or not he's going to talk about putting more investments into the business. But the key thing is here in this entire topic what we're talking about is you could invest into just the businesses, just that sector, right? But if you continue to put more money supply out there, if you're going to continue this expansionary monetary policy and all the tools that you use during that, then you still have this problem of inflation. So right now in the UK, the problem is when it comes to energy prices, and then it rolled into food prices and the food shortages and things like that. Where even the prime minister came out and he's like, "Yeah, get used to the food shortages for a while." So you have a lot of these rippling effects that are going on, and now the big question is, well, in this annual budget release, if you're going to go ahead and invest into the businesses exactly what they're asking for, then how are you going to handle all the other factors or the side effects of it?
Mm.
So with that being said, it seems like he is set to save the spoils of record rebound and UK economy. So this is going to come out today. This is obviously going to be significant. So if you're trading any of the GBP pairs, then this is going to be very, very important to watch out for. I'm trying to see what's in here that we haven't seen yet. Yeah, so he's due to speak at the Parliament at 12:30 p.m. London time.
We shall see.
Mm-hmm.
It's so interesting their stance on inflation, all these different central banks,
Mm-hmm.
and how they were very just acting like it's not that big of a deal, transitory, all that stuff. I mean, not everyone, because a lot of people buy it, but a lot of people like yourselves that trade,
Yeah.
You should have seen right through that. You know that when you increase the supply of something, the amount that they did in the past year and a half, you know exactly what's going to happen with the economy of that.
Yeah, because there's no balance whatsoever. For example, the Federal Reserve's dual mandate. What exactly is that? Control inflation and price stability. Right? And so now if you just focus on those two things, your main purpose, if you're just using that as kind of your compass to dictate what kind of policies are you going to be moving forward with, well, you're already putting in so much money into the economy, and I understand that's to help with the consumers and all this type of stuff and employment. There's a lockdown, but there's no way to also help with the employment side. The only push that we've really seen in the past year or so is just that Biden came out and he was like, well, if you're unemployed and you are offered a job, then you must take it. Or your unemployment benefits and things like that, they're going to get affected. A couple of months down the road, well, they got expired anyways. But a lot of people, they're still not going back to work. There's millions of jobs that are opened up, but there's millions of people who are still unemployed. And it's because now they're trying to acquire new skill sets to move into a new industry. Whereas in the UK, the government was actually paying for this training for employees to get new skill sets. And so majority of the people, they wouldn't be, completely unemployed like they were in a lot of other parts of the world.
In UK, are they doing the mandates as well?
Which mandates?
Vaccine?
Yeah, That's still going. Well, for the children one, I haven't seen the update about that just yet. But yeah, so they're talking about like booster shots and all of that still, like we are
Okay.
here.
Because I was going to say for employment, it could be the same thing going on over here with the mandate and people dropping out of work or being fired.
Yeah, so well, there's that, but also that's another thing that businesses are pushing for at the moment, and they're telling the Biden's administration like, hey, can you push that mandate out until after the holidays? Because holidays things start to pick up again, and there's like seasonal jobs and things like that, so you need employees for that. And there's a lot of businesses who are saying like, well, I'm not gonna be the vaccine police here. Yeah, so if people don't want to get vaccinated, that's completely. If they're fine with getting tested every couple of weeks or every week or whatever it is, I don't. Why is that the employer's problem?
Yeah,
right?
Why can't that happen?
Yeah.
But that also raises the question of, if you're gonna wait till either after elections or after holidays to input a mandate, is that really about health?
Right. Well, yeah. Well,
is
there's
that really
that
about the public health?
Because cases are going to be increasing during the holidays. People are going to be traveling. I mean, COVID was at its peak last year, as too, right? And people are still traveling. What makes it any different now, especially when a majority of the people are getting vaccinated, right? Yeah. So if you want to go through all those details, here's the article. But it seems like the sentiment right now is that the chancellor might be on the side of the businesses, and whatever he talks about might be very helpful for the UK's economy. But think about it from an investor's perspective. If he does come out and say like, hey, I am going to help and we are going to go on with putting more money into the economy, what does that mean as an investor? Is that somewhere where you want to be investing? So is that going to be strengthening the overall pound, or is it going to be weakening it? But also remember, these fundamentals are coming out as we're breaking monthly resistance levels for a lot of the pound pairs. So as we're breaking this with a lot of bullish momentum, what do we need to see for that retest that we usually look for? So what to watch out for as the UK budget is delivered. And so here are the different things. So the banking surcharge, the business rates, energy bills, universal credit. So these are all the different things that they're going to be talking about. So and this is what you want to be watching out for. And so you guys can just look this up. So if Bloomberg is giving you that paywall, then you should be able to see this for on some other website as well, like Yahoo Finance or something else.
Can they see this if they don't subscribe to Bloomberg?
They should be able to, because Bloomberg gives you like some free trials, but if you've like used up all of those, then you should be, if you just put down like what to watch out for in this entire title, then they should be able to see it on some other websites as well.
Also, guys, if you can't afford Bloomberg, I know it's like $34 a month, something like that. Not that you can't afford it, but maybe it's something you don't want to pay for. They have a bunch of newsletters that they send out completely free. 5 things to watch out for, evening briefings, stuff like that. It sends it right to your email, and it's a whole page of just like breakdowns of different subjects. Gives you the subjects of what they're going to be talking about. Then it breaks them down in there, and it sends you 3 of those every single day before each session: Asian session, London session, New York session. So,
and there's also there's also the Forex Live that you introduced me to. So there's also that, which is also very helpful because it gives you a breakdown of every single session.
I love Forex Live. My first mentor showed me that, and he's a swing trader, so he was checking fundamentals right in the beginning of the sessions and everything. Obviously, you should anyway.
Yeah.
But Forex Live, guys, go to more at the top, then session wraps, and then click on session wraps, and it'll give you the previous session wrap and all these different tabs that you could be clicking on for like headlines, or it gives you the paragraph at the beginning. Yeah, Sharma's going to show you right now.
Yeah, so if you just go onto Forex Live, click on more, and then you have session wraps down here. So if you click on that, it's going to give you all this news. So just click on view more. This is Australian, so Asian session news wrap. London session is still going on, so that's what you're not having a London session wrap. But this
London comes out around like 8:30 or 9.
Yeah, so as you're coming close to that end. Like New York hasn't even opened up yet. New York's going to open up in about 45 minutes.
Yep. And then the American, obviously, or the New York, they call it the American, but the New York session is normally the most in-depth because it's the last session of the day.
Mm-hmm.
So they'll give you a wrap-up of like what the how these different pairs did.
Yep.
Yeah, if you scroll down a little bit more, it's like just a longer, there you go, like a longer, normally is a longer little thing, especially on a Friday.
Yeah. So if you guys this is a good place to start if you're just trying to get into fundamentals and trying to understand what's going on, because they're giving you breakdowns of all the economic data that you're going to have on your Forex factory calendar anyways.
You guys want to get into fundamentals, just start making this a habit to look at this every single day and just go in depth into some of these tabs that especially that are bolded, and do that for the next couple of weeks or a month, and you're really going to start to pick up on a lot of the terminology and what people are talking about.
Yep.
Things that you need to know, maybe things you don't need to know, and you start to weed these out.
Yep.
So it's good practice.
Alright, so let's do some technical analysis and get into, well, how are the fundamentals going to align with the technical analysis. So usually what I do is I'll go up to monthly, weekly, daily, and I'll redo some of these levels and see like what's going on there. And especially if you're scalping, you should be redoing your levels every session that you're coming onto the charts. There are always going to be new developments. So don't hold on to your analysis on the 30-minute, 1 hour, 15-minute, 4 hour from like Monday and it's Wednesday already. There have been new developments in the market. So I start off with the monthly time frame. I'm going to look at the most recent resistance or support levels, and then I'm going to look to the left to see, well, how many times has this level been rejected. The higher the time frame, the stronger these levels are going to be. And the more price reacts to these levels, the stronger these levels are going to be. Right? So this is a pretty strong level where price has respected. This is all consolidation that happened back in 2016. And then you had a nice drop back down from there. Comes back up, and we have been below this area since 2016, and it's 2021 now, right? So it's been a lot of years. And so what I'm gonna do is 155.700. You got your monthly resistance. So if price is hanging around this area, we did push up with this top wick rejection right here. So you got that top wick rejection, look to the left, that's tapping right into that consolidation area to the left. So what happens every time we tap into consolidation? What happens every time we tap into consolidation on a 30-minute time frame?
Get low reaction.
You get reaction, and that's true of the monthly time frame as well, right? So that's that monthly resistance I would mark off. If we can maintain above that, there's really nothing that's stopping us from coming all the way back up and tapping into that consolidation resistance up top here, which is that 162, or yeah, let's do 161.700. That would be the next stop based off the monthly. So if this is going to happen on the monthly, then what do you need to see on lower time frames? Those are some of the questions that you want to be asking yourself. And then this was the last support price made, and we had a nice correction, came back down and respected these broken resistance levels, and then pushed right back up with a ton of volume to the upside. 149.900.
If you can just stay on the monthly real quick and scroll to the left, it'd be awesome. All right, so let's see. Can I annotate on here?
Yeah.
There we go. All right, so if you could scroll or zoom in a little bit, so that you have, and then scroll to the left a little bit. Perfect. Nope, so that you can see the current price action, and then this stuff right here.
There you go.
All right, perfect. All right, so as you guys know, the current climate of where GJ is right now, we're in a bullish trend because of COVID. Like, we're in a recovery from COVID. That's a better way to say it, right? So price is on its way up since COVID. COVID happened right over here. Now, if you take a look at this market recovery right over here, this is from the 2008 market crash. Now, if you take a look at the current price action of where price is right over here, the levels that Sharma just broke down, 156 and 149,900. Right? Price was in this bullish trend over here, and we ended up reaching 156, reacting to 156, just like we did over here as well from the Brexit recovery. And price ended up retracing and coming right back down to form this support right over here, right? Same exact thing happened right over here. Now, what happened once we broke 156 after creating that support and breaking through? We ended up coming up, creating this high, retesting 156, and then just skyrocketing.
Yep.
Right? That's probably from interest rates. Now, the reason why we bounced off 149,900 and basically skyrocketed through 156 within 2 weeks is because of those talks of interest rates. And that's why the fundamentals kind of come in as far as giving you guys confidence in some of these moves, because, they give that confidence behind each move that you're thinking about, especially with the technical analysis. They're the background, right? They're the why. So right over here, if they increase interest rates next week, what are we going to see with GJ? We're just going to be mirroring some of these moves over here and continuing right back up. So just pay attention to what the monthly looks like right over here. We may get something similar. The month is almost done. Let's see if we even close above 156. I mean, right now it doesn't look like we may. But again, we still have a couple of days left. Yep. But again, next month is November. They talked about increasing interest rates in November before even tapering. So that's going to add some strength to the pound, and you're going to see this thing maybe retest, but you're going to see it basically skyrocket just like it did right over here.
Well, that's the gray area where, well, if you're going to increase interest rates without tapering, then what are you pretty much walking yourself into, right? And so it takes you, let's say you increase the interest rates, you need at least a month to see what are all the effects that are coming into play now after you have increased the interest rates. So if you're not even tapering, you're not pulling back that money that you've already put into the economy, and now you're starting to make it more expensive for consumers to take out loans, then what effects are you going to start seeing? And it's going to take you a couple of weeks. So let's say it takes you 4 weeks. That's a month. So we're going to see probably that optimism kicking in, price kind of just flirting around this area and everything in those 4 weeks. And then you start to see the effects of it. Now you have your NFP coming out the following month, right? So in whatever's happening in November, now you have NFP coming out in December that's reflecting November's data or whatever's happening in November. So those kind of things. And then that's where you want to start seeing is this where we're going to finally break above, because the optimism get some sort of a retest, because you might see consumers not reacting well to it. And then are we going to be finally able to break past this 161,700 level if the government and the central bank are able to adjust according to whatever's happening with the consumers. Can you guys on YouTube hear me okay? Somebody just said to increase the volume, but mine's pretty much full on my side. All right, let's drop down to the weekly now. So on the weekly time frame, all of this is pretty much your consolidation, right? You had a nice push up, you had a pullback, another nice push up to that 155,700, and then another nice pull back down. But we kind of just hanged around this area since around March. March is when we broke above 149,900, 150 level, and this is kind of where we were just hanging around, right? And then we finally just broke past that, got this sort of a retest. So this week, pretty interesting, where as of yesterday, matter of fact, when we were doing our trade breakdowns and we're just looking at the charts and everything like that, like during Asian session, you must have seen how bullish this weekly candle was. We were quite bullish. We were sitting around these areas as of yesterday. You just had over London session a massive pullback and a seller's pressure kicking in, where this entire weekly candle went from bullish now to almost a doji. The key thing here again is, are we going to hold this 155,700 as a support and continue pushing up? If that happens, then you're pretty much making a support, and then you have a nice bullish momentum that rolls into next week where you can look for scalp opportunities to fill this entire wick. If that fails to happen, asking some more of these questions where, well, if we break below 155,700 after the annual budget is released today, let's say, and there's, the investors, they don't take it very well, and you have like this entire sell-off that happens, you're coming right back into that weekly consolidation. So what are going to be some of your trade opportunities? And that's where you have to narrow into your price action when it comes down to this consolidation. Anything else, Stefanos, before we go ahead and move on?
No, I agree with everything you're saying.
All right.
It's
cool.
pretty crazy how we're just rejecting like that. Now, we did have, what did we have this past week? You can keep going. I'm just trying to check.
For sure. So on the daily time frame, you had a nice push up. We got a retracement, and then this is where we made that support, right? And we started pushing back up. We came back up, and one thing that we were looking at all of yesterday was the fact that price never really got to continue above this last bearish top wick that this candle made. Price never really got to break above that and continue bullish. All it did was come back up, reject this, and then when the new daily candle started forming, barely a top wick and a lot of seller's pressure. And that could be that uncertainty leading up to the annual budget of what's going to happen in the pound, plus the news about cases increasing in the UK with potential restrictions coming in again, right? So as long as we can hold on to this area as support, we are pretty much set to continue bullish. But another key thing is you want to start narrowing into your price action. Start looking for those initial break and retest that you need to see happening, those initial resistance and support levels that need to be broken before you can look for those swing trade opportunities, right? Just the support being held here on a 15-minute time frame is not going to give you an entire swing trade opportunity for 200, 300 pips. You would need to see those retracements. You would need to see that break and retest on the hourly, on the 4-hour time frame, on the daily time frames to fulfill whatever's happening on the monthly time frame, which is still that bullish momentum to the upside. So on the 4-hour, this is London session right here. That entire drop down. The current 4-hour is making a bottom wick rejection and it flipped bullish, and this is kind of where we're sitting at. So are we going to be mirroring this entire move that just happened here? So this is still a pretty good potential right here. So even if we take the trade on the following 4-hour candle, if it is bullish, then you have about 140 to 150 pips that you can take advantage of, right, to the upside. Are we going to be mirroring that? And on the daily time frame, as we're looking at what's happening here, all of this, there's no clear structure just yet. All this looks like is simply a retest from this bullish momentum to the upside, just a retest of 155,700. That's it. There's no clear structure of where we headed. All the lows here are being broken by just the current daily candle. Price was pushing back up. You were breaking the highs and continuing. Like, there is no clear structure here just yet on the daily time frame.
Oh, I'm sorry.
No,
wait for confirmations. If you do think price is going to break, from 156 and hold the support and continue up, mirror this move, just be aware of the confirmations that you're looking for instead of just taking a blind buy and just hoping it's just going to take off. You just want to wait for certain levels to break. That's why you break down the lower time frames. Even if you do swing trade, you take a look at the lower time frames and see where price is at, see where it's reacting, see where prices it's reacting off for key levels, and you go from there.
Yeah, absolutely. So if the daily is consolidating like that, then obviously as you drop down to lower time frames, you're going to start to see messier price action. So now if you come onto the 4-hour time frame and you're looking at this, well, where do you pretty much take the entry where you have the confirmation that price is going to continue bullish? How would you do it on any other time frame? You start marking off levels that are showing you that, hey, this is a resistance, this is a support, this is where price has been rejecting this multiple times. So in this case, for example, where do you have a clear picture of, well, price is going to continue bullish and I can leave runners going? you can take scalp opportunities leading up to, let's say, 156,500 or 156,600. But once that's cleared out, then you have clean moves coming all the way up to 157,500, right? So around these areas, you could take clear scalp opportunities to the upside for about, let's say, 30, 20, 30, maybe even 50 pips coming all the way up top here. Once that's cleared out, then you can close partials, let the runners go, and once you're out of that consolidation area, so this itself is about 56 pips, and then continuation up is almost like 100 pips. So once you clear out of these areas, are you clearing out of this daily consolidation as well? So breaking above that previous resistance that you made on the daily and then a continuation up is how you turn that scalp into a swing trade. So this is how you pretty much use the different time frames as you start dropping down onto lower time frames together. So even on 4 hour, what you were seeing was that bottom wick rejection, the candle flips bullish, and then that's kind of where we're sitting at right now. When you drop down to the 1 hour, this entire price action just gets messier. This is all from like the daily time frame that we're looking at. But now if you start narrowing into your price action, what's happening right now? How am I going to take this trade? You got a support that's currently being made at the moment. If price just continues holding on to this, then you start identifying, well, if price can clear out of, these wick rejections here, then we for sure are just continuing up. There's really nothing stopping us at that point from coming up to 156,600, right? And then once that's cleared out, there's really nothing stopping price from coming all the way up to 157 flat or 157,200 or 157, 600 levels. So that's how you would start to narrow into your price action in order to see where can you take your trade, the optimal trade, the optimal entry, and then just let the trade run from there.
Guys, I love this level, or not level, but this candle right here on the 1 hour. Normally when we hold the support, also we get this hard rejection right here. Normally we end up filling that wick, right? Even if it's a bearish candle, we end up filling that wick and holding support and continuing right back up. But again, like I said, and Sharma's going to break that down on the lower time frames, there's levels like here that you need like a resistance to break and maybe retest before you take this thing up. So just be aware of that.
Yep. And then you're going to do the same exact thing as you're dropping down to lower time frames. So exactly what you said, Stefanos, that was all that rejection to the downside. Now we're starting to create these supports, right? So on the 30-minute time frame. So if we're going to look for any scalp opportunities, what do we need to see happening here? Well, breaking above the resistance and continuing bullish, right? Breaking at least the previous 30-minute high. So then you have this entire move up coming at least to that 156,400, which was that previous break and retest. Once that's cleared out, then that 156,600, 156,700. Once that's cleared out, then the next level's up top here.
We have the devil in here. Who's this?
That's Sukhpreet, so he's part of the group as well.
Nice. What's up, man? Devil.
Alright, let's do gold as well. Let's break that down real quick. I don't really expect much movement on GJ until the budget release.
Yeah. It may range there between 156, 200, and 156.
So that 1900 level, that's also, let's start off with the yearly from that, because that's where these levels come in from. The three levels I'm still always looking at for gold, which is the 1900, and then you have your 1680,
yep,
and then your 1800. So the 1800 level, we can start to modify that as we drop down to lower time frames, because we're going to see how price is kind of stuck in consolidation on certain time frames here. But what we're starting to see here on the quarterly time frame is this huge bullish momentum to the upside. You got that resistance being made up right at the 1900 level. So price has respected this about 4 quarters in a row. So the first rejection right up top there, and then these 2 quarters kind of made that resistance, and then the 4th quarter came up and rejected that 1900 and came right back down. And then now we're starting to still continue this bullish momentum to the upside. Notice how price is still struggling to break above this area, break and close above this area. In the last 3 quarters, we have failed to do that. We have just been tapping into that 1800 level.
Those rejections came from solid NFP.
Well, a lot of these rejections are coming from the fundamentals, the back and forth that we have been seeing on a lot of the fundamentals lately, right? So this is, when you drop down to the monthly time frame, this is where I talk about, this is what I was talking about when I say you got to adjust the 1800 level, because now narrow into that price action where you have this entire consolidation that's happening. Price hasn't broken out of this area for the last 4 months. And that's that, let's say, 1815 level. And then this is, I'm going to round it up to 1760. So between 1815 and 1760, price has just been stuck in this area. And we have tapped into this before, previous support, pull back up, and then a nice sell-off to create a new low. If you look to the left, same thing. So this is where we had our first fake out, and then from there, price just kept tapping into it. Notice, every time price taps into this area, there's a ton of volume that follows. You got that wick rejection, came back down, rejected, and closed below it. The following candle, just a massive sell-off. This candle came up, made a top wick rejection. What happens after that? Another sell-off. You're coming right into that consolidation area, the previous one right here. We come back, tap into that area, and then this is finally when we start to see some better fundamentals coming out, macro fundamentals coming out, macro data coming out of economic growth, global economic growth, and we started pushing right back down as, you know, we start to recover from the previous financial crisis. So now what's happening right now? You're seeing the same exact thing. You got those fake outs, and then now you're kind of just stuck in this consolidation. And every time price taps into, let's say, 1900, there's a massive sell-off. Every time it tapped into it, there's a massive sell-off. Right now, what's going on is price is just stuck in that consolidation, right, between 1815 and 1760. So what do you need to see happening here for price to break out of this consolidation? In order for gold to go bullish, you need to see some more market fear settling in. So if there's anything when it comes to geopolitics, for example, right, so more wars or more back and forth, more disagreements happening on an international level, you need that, right? You also need, let's say, more COVID cases are increasing right now in the UK, in the US, and are they going to get to the point where you're going to start seeing restrictions coming back into play? Is there going to be another lockdown like it happened, you know, the past couple of months from like March 2020 until the past couple of months? Most likely not. But they are going to be putting restrictions in, right? So those are some of the things, and then there's a lot of other fundamentals, of course, that are going to be causing market fear. But if that happens, that's what's going to help us break past 1815. And you will see that from a technical way. You will see that on the weekly time frame and on the daily time frame. That's going to help us continue up to 1900. If we start to see more optimism, for example, in the US, this week we're supposed to get the emergency authorization from the FDA for children vaccine, ages 5 to 11. If that happens, then also getting that approval from CDC, and then also actually going out and giving those shots and those vaccines to children and seeing whether the COVID cases are starting to drop back down, right? Or starting to see what are the effects that are actually going into play, what are the effects of those vaccines, all that, you know, you have to take into consideration all those factors. And then in the next couple of weeks or so, give it about like a month or so. This is where you actually get to see the true picture of what's happening for anything that you're going to implement, right? You need to give it time to actually approve it on, like, let's say a higher level, and then start implementing it on the lower levels, and then actually seeing what's happening on the ground level, right? It's going to take you about a month or so. And then is that optimism finally going to take us down to 1680 again?
Before you move over, just wanted to point out, as you were pointing out the technicals, if you guys pay attention to like what happens when price reaches these levels, you got to understand that like somehow technically and fundamentally everything lines up, and when price reaches a certain level, something fundamentally happens. Like right down here, we were in this market correction from COVID, right? We reached historical highs. Then, things started to calm down. We realized the science, things started to open back up. Vaccines came into play and reached us right back down to 1680.
Mm-hmm.
Then what happened right over here? We started getting, back in April and May, we started getting early signs of inflation. Some things that the U.S. public or people around the world were starting to pay attention to. This is when, if you pay attention to the Fed, what they were saying that it's going to be transitory, nothing that big of a deal. But that's what was going on right over here. So fear of inflation. Plus, you got to understand that the Israel and Gaza conflict was going on right over here. Mm-hmm. So that pushed us right up to 1900. Right? There's a lot of turmoil in the Middle East. You're going to get a bullish gold. Right? Now, once we reached 1900, we ended up getting a surprise, I think in June, of NFP, which NFP pushed us all the way back down to 1760, mm-hmm. right? Then we had this little correction a month later, and then guess what? Another positive NFP came out that pushed us right back down to 1680. And we reacted exactly perfectly to 1680 and rejected that level, like I said, perfectly. So just understanding the fundamentals and the technicals, how they line up, to me, it's pretty fascinating. I'm sure it is to you guys too, but it's crazy how these certain levels are that reaction point, no matter what.
Yeah. And in the last couple of months, this is where you have been seeing that back and forth of where, well, let's say, COVID cases are decreasing. That's one of the main factors for a lot of the economies to even open up, right? So let's say in some places, COVID cases are decreasing, and then now you have political tensions, right? And so now there's this back and forth that you're seeing in these fundamentals where if one aspect is, becoming better, then the other one is becoming worse. Or there's, some sort of unrest that's happening in that aspect, whether it's political, whether it's economic, whether it's geopolitical, whatever it is. Like, you are starting to see this back and forth happening in fundamentals where it's being reflected on the charts where you're sitting in this key level. This is consolidation. This is the market, like any other time frame, collecting orders, generating orders. There will be volume that is going to kick in once these levels are broken. And for that level or that volume to kick in, you need to see positive or negative fundamentals. Like, there are going to be fundamentals that are going to come out back to back, and they're going to help you break past these levels.
Yeah, guys, there's definitely little scalps that you could catch in here. Mm-hmm. Price, bouncing off some of these levels. But honestly, myself, I haven't traded gold in a couple of weeks at least, because just sitting in this range right over here, price is just collecting orders to mirror these moves or these moves right back down to 1680, or again back up to 1900, like Sharma pointed out. 1830 is a very significant level as well, but I'm just waiting for that. Like, I'm in no rush to. There was one move as far as this candle. This was really the only thing I was attracted to, because we held support right over here and we printed this candle, this bullish candle, with a wick to fill, right? Mm-hmm. So that being said, you could have entered something with your stop loss below that candle and taking price right back up to 1815, 1800, or 1830 right up here to fill this wick. It's a nice, healthy support. But other than that, I wasn't really attracted to anything else. Mm-hmm. It's just kind of a mess.
Yeah, there's quick scalps that you can take. So I tried taking a scalp last Asian session too, right? But again, you have consolidation on a monthly time frame. It's not going to get any better on a weekly. It's not going to get any better on a daily. It's not going to get better on 30-minute, 15-minute. If you're looking for quick scalps, then yeah, this is a pretty big range. You can look for scalps. But understand the restrictions and limitations of your trade. You're not going to take a trade on a 15-minute and then have the expectation that's going to go to 1900 without seeing any sort of correction or anything like that on, higher time frames, like the 1 hour, 4 hour daily time frames before price gets to 1900. That's just not going to happen. But you can take scalps. Maybe you can take trade opportunities, exactly what you showed right here, Stefanos, where you can take a trade from, 1760. Well, it wouldn't be right at 1760, but like right above that area, you can take scalps right into this level, right? But also understand this is a strong level that price hasn't been able to break past for the last 4 months. So there's a very high chance that price is just going to react to that.
Oh, yeah.
And then dropping down to the daily, same thing, where you have this entire consolidation that's just happening. So there's minor structures within the overall structure. So monthly is consolidating, weekly is consolidating, but then when you come down to the daily time frame, there's these minor trends that you can take advantage of, right? So there's that minor bearish trend, and then identifying, well, if what level needs to be broken for this structure to be broken, which is right at 1760, right? And then you have that minor bullish trend to the upside that we're still in at the moment, by the way. So what levels need to be broken here in order for this structure to be broken? Somewhere around this area here. So you need price to break below this, give you a retest, and then a continuation down.
Yeah.
Right, and then you can come right back into 1760, and that could be a potential sell opportunity that you can take. But if price just consolidates here like it does here, or even into these areas, which is just wick rejections, then no, you don't have a trade opportunity at all, because you don't know which way price is headed.
It's all a crapshoot.
And then dropping down to the 4 hour. So 4 hour massive sell off, you got that support being formed, and that's right into that structure that we're talking about, right into those key areas where you don't have the confirmation just yet of any sort of sell or any sort of buy opportunity. So same thing, if you're going to look for sells below these areas, you need to see a retest and continuation down. But here, if you're going to look for buys, then what do you need to see happening? Well, we're going to need to see this 4 hour candle breaking the high of the previous one, right? Or this 4 hour candle closing bullish, and then the next candle taking us up, and then identifying if price breaks above, let's say 1792 or 1795, then you have clean buys coming up to 1815 level all the way up top here to create a new high.
Now, if do you follow the indices, right?
Yes.
If at some point you could show them DXY, I'll show you guys some correlation as far as giving you guys some confidence again behind some of your moves. If you take a look, the 25th of October,
right here,
we've been in a nice little correction phase. Well, we were in this correction phase because the dollar's been a little bullish over here, coming up to 9,400 or 94, pushing up, right? Then we entered this correction phase, right? And now we're holding support to maybe continue right back up. We're breaking through this level. You got this candle closing above. Are we coming right back up to this resistance to continue up? Now, if you take a look since the 25th, we were holding this support. Now go over and look at gold on your chart at the 25th, and it's the opposite of gold. So there was a couple guys in my group that caught gold trade yesterday. It was a pretty nice trade, but I was just asking him, like, did you use the dollar index to as confidence? They said no, but they said moving forward, like that absolutely makes sense, because they went back and looked at it, because it just adds more confidence behind your trades. That's where fundamentals come in. It just adds more confidence, and confidence equals a higher lot size down the road.
Yeah. So you can always get better regardless of whether you're just doing technical analysis or whether you're just doing fundamental analysis. You know, it doesn't matter. With technical analysis, like, the way that I try to get better now is try to still go with scalps turning into swing trades. But now how can I take my scalps better, right? How can I, like, put a 10 pip stop loss and still have, like, a 4 to 1, 5 to 1, 6 to 1 of risk to reward? You can absolutely do those, but it just requires you to wait for a little bit more time. So instead of taking a trade opportunity here, now you're going to be taking a trade opportunity on the following candle after you get a rejection. So getting confirmations from multiple time frames. And then same thing in fundamentals, you can always get better. So on the 4 hour, one level that I would want to mark off right here, it's going to be exactly where price is making that current support, which is tapping into previous resistance areas. Now let's take a look to the left. Oh, look, you got support being made right into these areas. You're cutting through consolidation, right? So it's a pretty important level that price is pretty much tapping into right now. And that's just from the current 4 hour support. That's where the current 4 hour support is forming. So now if you're going to look for any trade opportunities for gold, you need to wait until price kind of breaks out of this area right here and then continues bullish, so then you can look for quick scalp opportunities and maybe even turn those into day trade opportunities and take them all the way up top to maybe 1800, which we know is an important level from the yearly time frame, and then tap into like 1810 and then 1815. But if the hourly looks like this and I'm not even seeing like a clean move happening on the hourly, I don't even drop down to the 30-minute because there's really nothing here.
Yep.
And same thing for GJ.
Yeah, we're going to be ranging over there for a little bit. So
in the next 12 minutes, like if price is still ranging, the chances are it's going to range until that annual budget comes out.
Yeah. And did we figure out what time that's going to happen?
12:30 p.m. London time.
Okay.
So this could be another thing, like figuring out how do you know the consolidation is starting, or like how do you know price is going to start to consolidate. If I start to see this type of stuff on like the hourly time frame, where price isn't really breaking the highs and it's just kind of stuck in this area, if it does this for like about 2 or 3 candles in a row, then you could already tell that price is simply going to consolidate until some news comes out.
Sharma, you see our guy up here? Commuter, Chris.
Oh, I do. I do.
Good morning.
Saw you on the train, brother.
Yeah. How y'all doing?
Good, man. How's your morning going?
Going good. I'm just watching gold. That was a good analysis because I've been kind of confused on gold because it's like you said, it's like a barcode, especially on a higher time frame. So
yeah, 100%.
And I looked at that resistance that Sharma was talking about at cross, and I was looking to take a buy there, but I don't know. I think I want to wait till it passed 1795.
Yeah, that's
just get a quick scalp to 1800, leave a runner, and it's safe as possible since I'm working.
Yeah, if anything, I'd rather wait for price to break 1794 before taking anything. Like, I don't want to be trading in this whole area right here. Right over here. So once we break above here, this may be your move right over here. But again, like with me, this is why I always say, like, you should stick to 1 or 2 pairs, right? And the reason I say 2 is because it's you can make a very good living just trading 1 pair, but I could see people getting very impatient, especially when your pair is in a situation like gold is right now, where you're just kind of like, you're almost like manufacturing moves. Like they're not moves, they're not real moves that you could get. They're just like, you think you're seeing something and you end up just jumping in, and you end up sitting in this consolidation and getting stopped out, whatever the case may be. But it's good to have, let's say one of you guys is just getting into trading. You're only like 6 months to a year in, right? And you're trying to master that 1 pair. I mean, if you're 6 months to a year in, you're probably trying every other pair in the watch list. But what you want to do is you want to focus on 1 pair that you're trading. And that's it. And Chris and I, Chris came on our podcast last night. We're talking about mastering 1 pair, becoming a PhD in that 1 pair, and becoming that go-to person. Like, if people need advice, like, what are you thinking on this pair? They trust the shit out of what you're about to say.
Yep.
Right? But at the same time, what you want in the background, in your back pocket, per se, is a pair that you're live back testing every single day. You're watching it every single day, studying it. Maybe not back testing it because you're spending your time back testing your main pair, but this is a pair that you're journaling the trades that you would have taken on this. And you're spending 2, 3, 4 months doing this before you start putting your money on the line. That's how you build a trading plan. That's how you build your strategy as far as adding pairs to that trading plan. If you guys are just starting out and you just formed your trading plan, hopefully you did, it's very empty. It's almost like a blueprint right now for what you're going to be doing. But eventually you'll be able to add new setups to it. You'll be able to add new pairs to it. And that's where you kind of start to evolve as a trader You just don't want to rush that process.
Yeah, so for example, what I'm doing currently is on my Trello, I have this low risk setups, like card setup, right? And so now I'm testing out, again, how to turn those scalps into swing trades, but make it even better, right? So that's why it's low risk, where I am entering those. I have been watching those setups for the past couple of months or so, and then now I'm like finally, risking like only 1%, right, or 0.5%, very little. So that's not even me like trying to make money off of that. So there's no reason to even flex any of that, right? But it's just going in and actually like getting that taste of, okay, I've been watching this setup for so many months. Now I'm gonna go in and just test it out and see how how it plays out. That trial and error. And then eventually, when you start getting comfortable with it, that's when you start going in and you start risking your normal amount, which for me is 2% of my previous day trades. That's still what I move forward with. So not even my account, but my previous day of trades, right? That's just my normal risk for anything that I'm trading. And then I'm also testing this out in Asian session, because now the volume is starting to pick up for certain pairs in Asian session. So now also testing that out. Well, in Asian session now, is there news coming out, or is there like better momentum because for X, Y, and Z reasons? And so testing that out for a couple of months in a row. What I personally do is every quarter, I look at a different pair. Right? So I have traded all these pairs that you guys see right here, and probably more. If anything, I've probably just cleaned up this list. But these are the pairs that I have traded, or I'd still trade, and I'm in position trades for some of these pairs. But it's testing that out and then learning everything about that pair, exactly what you said, from a fundamental way. What's going to affect, let's say, USD SEC, right? Or what's going to affect my GBP JPY, or what's going to affect my Euro JPY, or what's going to affect my gold. From a technical way, what does that look like when I'm on the chart? And only bring it down to about 2 to 3 pairs. So every quarter, yeah, I'm looking at a new pair, but I'm switching that out for a pair that I'm already trading. So right now, this quarter, all I'm really focusing on is GBP, JPY, and gold. And I'm like kind of dabbing into GBP USD as well, but not so much.
When you guys start to understand the fundamentals a little bit more, you'll start to be able to trade some other pairs, and especially correlating pairs like JPY pairs, right? You're looking at JPY pairs, you're paying attention to certain things fundamentally going on with the entire world. Obviously, that's a safe haven currency. So you know that other pairs are going to react similarly to, let's say, GJ. You're gonna see if JPY is the main mover, you know that you're going to get maybe a similar move on EJ as well. But one thing I wanted to bring up, Jaden brought up, striked a good conversation over here. After 4 years, I know you were trading a bunch of pairs, but I love how you kind of cut it down to it looks like 3 pairs now. So a lot of guys are coming in here saying the same exact thing. Now, Aman was saying that AJ is my main pair only, and he hasn't decided on the second pair yet. Now, don't rush yourself into that process. Lie back, test a couple different pairs. See what you're used to. See what, if you're in this group and you guys trade gold, pretty well, or, you guys are always doing breakdowns of gold, then maybe start live back testing gold and journaling, doing like a full week review on gold last week, right? Yep. Or the week before, and getting used to seeing like the way it normally moves during your time frame, like when you trade. So don't rush yourself into the process of like, I'm going to pick US 30 and this is going to be my next pair. It's trying to figure out how your strategy works on one pair, bring that into another pair and see how that's working out, instead of like confusing yourself. And, gold moves differently than GJ, and you got to understand that. So don't think you're going to trade it the exact same way. That takes time. That takes time to figure out how to trade gold. It's a little bit of a juggernaut, and I know US 30 is too. So just give yourself time as far as finding that out, and you're in no rush. The market's going to be here.
US 30 is where a lot of people get burned.
Yeah, good point, Jaden. A lot of people get burned what?
With US 30.
Oh, yeah.
Yeah, and so that's like one of those pairs that, you want to be very careful, and you should be back testing that for months. to understand what's going on.
100%.
I back test US 30, but I'm not ready for it yet.
Mm-hmm.
I'm not ready for it just yet.
I think some things can affect you as far as other people saying things. Like I remember, when I was on Rakeel streams, Ted was really trying out US 30, and he was doing really well with it. So it caused Rakeel to try US 30 out as well. And then all of a sudden, like, he realized that the way he trades with reading candles and wicks and everything wasn't really working out on US 30. So I think that scared a lot of people out of doing US 30 without actually trying it themselves, without actually backtesting it themselves. Yes, you can take his word for it, but at the same time, you want to test it out yourself and see if you're kind of ready for it or attracted to it.
Yeah, well, the point is, I think the problem actually is that a lot of people, when they do any sort of analysis, whether it's technical analysis or fundamental analysis, we tend to have, like, like, for example, we talk about strategies in our trading plan, right? So we tend to have these, like, step 1, step 2, step 3, and this is exactly how it's supposed to be no matter what pair I'm trading. Instead of going for that step 1, step 2, step 3, exactly this is how it is, word for word, this is the wick that I need to see, this is a support I need to see, this is a candle close that I need to see. You have to understand every single pair and every single asset is going to be different. Right? For GBP, JPY, you're going to see these massive wick rejections, which is pretty normal. You're going to see consolidation, which is pretty normal, right, across time frames. And then you go on to something like GBP USD, right, or Euro USD. So let's go into, like, Euro USD, for example, where you start to see, like, there's not huge movements like we see on GJ, right? This is completely different. You're going to use the same exact strategy on this. When it comes to technical analysis, you're going to do the same exact fundamental analysis, but there's no step 1, step 2, step 3, word for word, this is how it is. You're always going to have to modify your strategy, even if you're on, like, a 4-hour time frame versus a 30-minute time frame or a 15-minute time frame. So now if you're going to go from currencies and you're going to start trading something like US 30, then yeah, obviously your strategy has to change a little bit. Right? It's the same thing if you're going on to gold. Your analysis or your strategy has to modify a bit. You have to understand what's happening in the market rather than being stuck to a specific candle formation or being stuck to, a specific bottom wick projection and then to the top or to the moon we go type of thing. Right? I'm saying this in general, like, whatever pair that you're trading, because this is the problem that we see for a lot of people who are trading. And this is something that I've noticed with myself too. That's why I can speak on it. In your early stages, you are going to be stuck to these concepts. You are going to be stuck to, I need to see a bottom wick rejection, the following candle cannot break this or do that, and it has to close a certain way. Things like that. Be stuck to the basic concept of it. Don't be stuck on this. Be stuck on the fact that regardless of whatever it's doing, it's still following that basic bullish structure that you see, right? This is the basic bullish structure that we go for. Regardless of whatever it's doing, this is still what price is doing here. No matter what, you still have highs being broken, you still have support, right? You still have rejections. No matter what, that's what you should be stuck to. That's what you should be looking for. Don't pay attention to, like, minor details, because you're just going to be stuck in your own analysis and then figure out, like, why are these trades not working out? Because you can't apply what you did on GJ to US 30. You can't apply whatever you did on US 30 to gold. You can't apply that to stocks. You can't apply that to crypto.
The best way I could put it is, this applies to men and women, because men and women attract each other at bars, stuff like that. But say you're in a relationship for 6 years. You get out of that relationship, you go to a bar for the first time, and you approach a woman, or a girl approaches a guy. It's not going to be like, you're going to probably fall on your face as far as trying to flirt or attract that one person, because you haven't been in the game for 6 years, right? So you got to give it time. You got to understand that it does take time to learn the personality of your pair, per se.
100%.
Amon thinks that's funny.
100%.
Each pair has its own personality. Looks like we're rejecting 156 again on GJ.
Yeah, we're just kind of hanging around this area. So this is another thing where now start to pay attention to what's happening with the wicks. You're pushing up bullish, but also notice how we haven't broken these wicks right here. So if we fail to do that, then the chances are all you're going to end up doing is consolidating. I think he's speaking right now. 12:30 p.m. London time is 4:30 a.m. PST. So I think he started speaking about 30 minutes ago.
Yeah, he already did.
Yeah. Maybe he still is. So we'll have to see. And that's why I clicked on, I'll go through that again. But you could just go to the annual budget release, just click on the folder, and then click on latest release. And it should take you right to the website. It didn't have anything.
What's it called? And then whenever you get back to the chart, no rush. But
Yeah.
The 15-minute on GJ is something good to look at. As far as the level that you want to break, if you were to take a buy right over here, this resistance, if you get a nice like break and retest over here, I'd rather wait for the 30-minute, the 1 hour. But if you get like a clean break and retest right over here, you could probably take this up to 600.
100%. Yes. So
Actually, I would say maybe 400, 156, 400. Let me see how many pips we got right there.
So up to 400.
We got about 25 pips.
Yeah.
To 420 right over here.
This move right here, yeah. I think we have an entire range that we could just come back and retest because this retest is only on the 15-minute time frame. We don't see that on the higher time frames, right? You have the 15, you got the 30, and then a continuation down. But also, you don't have that on the 1 hour, and you're breaking below, and you're coming right into these consolidation areas. And then 4 hour was a massive sell-off as well. So I think we still have some pullback to do. Come back maybe right into these areas here again, which is that consolidation that we saw to the left, grab some liquidity, and then see our momentum.
Sorry.
It's all good.
The Gary in here, do you have a Gary in your group, or is that my Gary?
I think that's your Gary.
That's my Gary.
It's me, Stefanos.
What's up, my man? He's back.
Yes.
What's up, buddy?
All good.
Oh, we got Tiffany in here. Awesome. Carlos. We got Jaden in here. Jaden, is that your brother? What else we got? I know we got Chris. And I think Reese had to go to work. That's normally how it goes. See, just like pairs, I start to learn you guys too. Your patterns.
All right, so we got the update on the annual budget release. Best economic growth since 1973. That's ambitious. So they're forecasting that it's going to grow by 6.5% in 2021. So he's going to hold off for a bit for now. Today's budget delivers a stronger economy for the British people, stronger growth, with the UK recovering faster than our major competitors, stronger public finances with our debt under control, and stronger employment with fewer people out of work and more people in work. So that's pushing that positive sentiment so far.
Sharma, do you have a iPad?
I used my brother's. I didn't get an iPad.
Oh, okay. There's this app on there. I don't know what it's called, but it's so good. It just gives you like an overview. It's a whole database of pairs. I'll find out the name of it for those of you that have an iPad. They also have it on the iPhone as well, but it just gives you like pre-markets, overviews. It actually has a chart program on there too. It's completely free. I'm trying to find the name of it though. Stockmaster.
Stockmaster?
Yes. I'll type it in here.
Alright, so far, this is the breakdown that he was giving. But so far, it says the measures unveiled so far include an end to the public sector pay freeze he imposed a year ago, a large rise in the national living wage, and spending totaling almost £31 billion on everything from sports field and museums to border security and medical diagnostics. Of that, at least £5.9 billion has already been announced. Higher borrowing today is just higher interest rates and even higher taxes tomorrow. So we need to strengthen our public finances so that when the next crisis comes, we have the fiscal space to act. So far, this is what the budget measures are detailing. Stockmaster investing stocks.
Yeah, so it just gives a whole rundown of currency pairs as well. Like you could click on GBP, JPY, it gives you a whole database for GJ. And then if you click on news, gives you all news from like good sources too. Daily FX, FX Empire, a couple other ones as well. But I like it a lot. It's cool to have like the two screens and then my iPad sitting there with like the whole rundown of the pre-markets and everything going on. So I can just glance over at it.
I'm gonna take a look at that. Maybe I'll do it on my brother's iPad and see what it's about.
It's worth it. It's free.
Yeah. All right. Cool. So far, this is what they're talking about, and then they're gonna update along the way as well. And then into the public sector pay freeze, £6.9 billion of spending on regional public transport, £10.9 billion, £2.6 billion, £3 billion. And £850 million. So far, if you guys are just looking at this, what do you think is the sentiment that they're trying to push for?
Andreas just sent something in. Largest increase in a century. 150 billion.
They're trying to push for a positive sentiment. They're legit, saying it as though we're investing in our economy. We're gonna invest into our public transportations and our education and all this type of stuff. We're gonna have a strong economy when we're bouncing out. Right? They're trying to push out that optimism.
Oh, it's moving.
Let's see.
It's at 1792.
I like it above 95. That's the safest for me.
So this is this is the area that
it could reject from hard, right?
Yeah.
1794, yeah.
So you want to watch for that and then wait for a break and retest and then a continuation up.
Okay.
I do like the daily though. If you take a look at the daily, how it's rejecting like that.
Yep, right off this level.
Yeah.
So this was off the 4-hour zone that we made, and this is also, if you look on the daily now, same thing. Right, we see price reacting to this area over and over again. So yeah, if we can continue bullish.
I was flipping. You bought it? Who was that?
Yeah.
Okay.
Showed the 90% as Willie said. At 10 pips, I showed 90% of my position, so close at break even. Let's see how it goes now.
Good trade. What'd you get in at?
Nice.
So basically, I do it daily. So I knew that they're gonna be a move. So I was just waiting. So we grabbed the liquidity on this 15-minute candle, right? As we were breaking the high of previous 15 minutes, I just got in, and it was just 10 pips, maybe 7-8 seconds. stop loss to break even, secure 90% of positions, and that's it.
Mm-hmm.
And just let it run.
Yeah, usually I close it all, but as Vijay told me today, yeah, let it run. That's how you're gonna improve. So just left it, and I guess I'm on 20 pips now.
Yeah, if
Yeah.
if you're having trouble with holding on to your pairs or just letting trades run, so the problem that we were pretty much addressing was taking the entry, and then you have your analysis and you're watching your analysis play out, but you have that little bit of confidence problem where you're closing out your trades too early. Close out 90%, go risk free. You've already won that trade, to be honest, right? Now just let the small percentage run. Either it's going to go and it's going to hit your TP and you're going to experience your analysis being played out, or it's going to come back down, hit your trailed stop loss. I always trail my stop loss instead of going to break even. And so trail your stop loss, so then you still get out profitable, but now you have something to go back and take a look at and think, was first of all your take profit too ambitious where you just like, a major TP, or were there certain levels that you probably missed and you should be going back and taking a look at, and maybe that's where you want to take partials or something like that instead.
Based on like my own experience, like I've been through this, and then so many other people I've talked to as well, where they do that, and it's good to definitely hold runners. But I feel like a lot of people that are scalpers, they try to turn every scalp into a swing,
Mm-hmm.
and that's just not like the case. It's not going to happen every time. You want clean ranges or something like that. But when you're playing in a range, you got to know that you have power to just close the full thing, right? You grab your quick little snipe out of the market. You grab your little piece out of the market, and you get right out. Like you got to know the difference, and that's where backtesting comes in, and eventually you'll start to get in the zone per se for taking these trades, securing, or just closing the full thing.
That's where also knowing the limitations or restrictions of your trade comes in. If you only see that setup on a 15-minute time frame and no other time frame is giving you that confirmation, then of course it's not going to turn into a swing trade.
Yep.
You need to realize in order for something to turn into a swing trade, you need to see that happening on the hourly, on the 4-hour, and on the daily. If those three time frames are not giving you the confirmation, a 15-minute entry is not going to take you to the moon.
100%. And,
okay, Vijay, I got my 40 pips. I closed everything here. That's good, right?
It's fantastic.
All right.
If you made money, that's good.
Yeah.
Also, like Sharma was talking about how you kind of need a different plan for each pair, and that's 100% true. And you also need a checklist of things that you look for and things that you do before you actually enter a trade as well. One of those is check every single time frame. Like Sharma was just saying, if the 15-minute is only giving you confirmation and nothing else, don't take the trade. If you're seeing a trade on the 15-minute or the 30-minute, a good opportunity, do a quick run through between the daily, the 4-hour, the 1-hour. Check all these again, because as you guys know, you could come to the charts at 6:30 in the morning and not take a trade till 8:30. At that point, the 4-hour looks different. The daily looks different. Maybe it's going to hold you out of the trade, or maybe it's going to be like, all right, I should take this based on these higher time frames. But definitely always make sure, write it on a piece of paper. If you guys are just starting out and you're just trying to figure out your strategy, you should have your trading plan right in front of you anyway. But have it right on here, a little checklist. Check every single time frame. Study the candles. Study the previous candles and previous wicks. Check the range. Check the price of where price is at. Are we at a psychological level? Is this range even big enough for me to trade? All these different things should be implemented into your trading plan. And before you enter that trade, way before you even enter that trade, you should have an exit strategy as well. Right? Before you click that buy or sell button, you should know, okay, I'm closing 50 if we do this.
Yep.
If we pass the previous candle in the opposite direction on the 15, 30-minute, whatever your rules are.
Yeah.
But you should have this template, no matter what the pair is, of things that you do before you take a trade.
Have a clear picture of exactly what you're going to do, and you should be pretty much, before you're getting into a trade, you should have already visualized how it's going to go. Right? And so when you talk about closing 50%, right, that's also very subjective. It comes down to your own risk management. So you close 50%, right, Stefanos? I don't do that, because I already, when I'm taking my trade opportunities, I'm looking for those opportunities where my stop loss is legit just 10 pips or even 5 pips. I legit have taken trades where my stop loss has been 5 pips and it has gone my way. But the whole point being is I'm not comfortable closing out 50% of my trade and then still letting that trade run, because now I'm just 50% confident. It doesn't make sense for me to be in that trade.
So
I'd
you
rather
just close the full thing.
Yeah, so I'd rather have like a very tight stop loss. And so in order for me to have that tight stop loss, I also need to make sure that my trade setup is perfect for my entry, for whatever my strategy is like. So if I need to wait for an additional break and retest, if I need to wait for an additional 4-hour candle to close because the confirmation that I'm getting off the 30-minute time frame is just not enough for me to have an entry with a tight stop loss, I'm going to wait the additional 4 hours. It doesn't matter. I'm going to wait for that next 4-hour candle to make a bottom wick and then continue up. So then I can take an entry. And the entire point is I'm keeping my stop loss tight enough so that as soon as it's heading in the opposite direction, instead of closing 50%, close out the entire thing. I'd rather take another entry and give it a second chance than sit in a trade opportunity where I'm only 50% confident, right? But I'm also giving it enough room where it can make bottom wick rejections and, do its normal thing that price tends to do. Yeah, so it comes down completely subjective, but 50%, closing 50%, works for some people. There are people who, do that in my group as well. So a lot of this is subjective, whatever we're talking about.
Yes.
Did you want to talk about this momentum to the upside?
Well, yeah, that's, you were just saying you always want to kind of plan your trades out and stuff like that. And that's kind of what I did over here. I want to visualize where price is going to go. It's a great practice, especially for training your eyes and getting used to things. And journal this too, if you want, right? You could make a card, whether you're taking a trade or not. This could be just like a session card. Like on my Trello, you have different levels, or not levels, but labels that you can label these trades as. I have one gray label that's like a session chart. And it's just like, I don't know if I'm going to take a trade or not. I just like the setup. I'm planning this trade out. I'm going to take a screenshot of what I just did right over here, and let's see if this plays out. And if you guys listen to people extremely successful in this market, like let's say Ted, this is all he did when he first started trading. He'd be at his corporate job at, I don't know where he was working, somewhere in finance, but on his lunch breaks or, going into work, he'd be plotting these trades out and just seeing if they work out all throughout the day. Now, if you're a scalper, you'd rather stick to one session, but it's just good practice to do this. You're not putting money on the line. And if you keep your emotions in check, then, you're not going to be getting too excited and trying to place a trade randomly at 12 o'clock in the afternoon.
Yep. This is pretty much what everyone does. Anyone that you look at, this is exactly how you collect the data. Right, you look at the setups and you look at the setups that work for you.
Exactly. Thanks, Jen.
And another thing that I want to point out was like the 1975 area, the line that I made here. And the reason why I did that is the wick rejections right into these areas. Look to the left, you got that wick rejection as a resistance. And then consolidation resistance here as well, and resistance. So if we can break above this and continue, then I think this is where we're looking for those clean buy opportunities. You're talking about 1794 break above, right? So this is pretty much the same exact thing. That break above is what's going to help you continue up to 1810 or 1815.
If you go over to GJ right now, price is kind of breaking out of that 15-minute. It's a big watch list.
Yeah, so in that, now it's continuing bullish. I would like to see a break and retest somewhere here, or at least wait for this candle to close, this 15-minute candle. If it can close above, right up top this area, then I'm waiting for a bottom wick rejection and then a continuation up. Then I can take like a potential scalp to the upside, but I would not be taking an entry on this candle here. And that's also because you have that bullish momentum, but see how we've been stuck in this area. So if you could just make that bottom wick rejection and then continue, I think we're going to have enough momentum, at least for those people who look for 10, 15, 20 pips or so. Then you would have enough momentum to the upside.
Got a good crowd here. We got about 20 people on the Zoom. How many people we got on YouTube?
Right now on my side it says 17 viewers.
Awesome.
Yeah.
Gio, what's up, brother? I don't know if you could speak.
We're also supposed to have news coming out in about 7 minutes, which is the durable goods.
Oh yeah. I was surprised with consumer confidence.
The UK one?
US.
Where was that, yesterday?
I think that was yesterday.
Yeah.
Yeah, I was very surprised with that. With everything going on right now, supply chain issues, inflation.
Mm-hmm.
I was very surprised with that. Depends where they're surveying these people.
100%.
Morning, Gio.
And then later, I think today, we also have interest rates for JPY.
Yes. Yeah, later tonight.
Yep.
Does that say tentative for you?
It does.
Normally it gives it gave me a time last night when I was doing the breakdown. No, you're right. Tentative.
Mm-hmm. It's usually going to be towards like maybe the middle or towards the end of Asian session.
Yeah.
Yeah. And then you also have the press conference. But I'm more interested in their outlook report because the Bank of Japan, they have been talking about how they're shrinking their growth projections, and that started after the Tokyo Olympics. So after the Tokyo Olympics, there were like a rise in COVID cases. They also went into another state of emergency lockdown, and then from there, they started to get this projection of like, we don't see growth happening for some time yet. They're probably not even going to be increasing interest rates. They haven't increased interest rates since 2016 or even further back, I think. But they haven't increased interest rates in a very long time.
Mm-hmm.
And so I don't expect them to increase interest rates this time either, but their outlook report is what's going to pretty much dictate the strength of the yen.
I mean, they haven't increased interest rates in years.
Mm-hmm. So we got 4 minutes before this 15-minute candle closes. I would like to see this candle closing bullish. If it can close strong with bullish momentum, then I want to see like a bottom wick rejection and then a continuation up. And I think we're pretty much set to come back and revisit the 156-600 areas, which is the consolidation areas from the hourly time frame. And we could potentially be grabbing liquidity from here and correcting this entire push down that happened during London.
Is there anything you guys like us to go over? Or questions about technicals, psychology, anything?
Yep.
You guys on YouTube get us once a week.
Do we think the minor news, what is it, consumer, let me make sure
Consumer
what's
sentiment?
coming out? Yeah, it's coming, I think at 8:30 today. Let me check. Yeah, the durable good orders and core durable goods, we think that'll affect gold when it come out at 8:30.
Good.
On lower time frames, 15-minute, 30-minute, but it's not going to change anything that's happening on, let's say, the hourly, 4-hour, or even the daily.
Okay.
Yeah.
Okay.
All this is just a change in the total value of new purchase orders placed with manufacturers for durable goods. Durable goods are things that last more than 3 years. Washing machines, dishwasher, cars, these kind of things.
Okay.
So we're rejecting right off that 1795 area right there.
Mm-hmm. That's what it did yesterday too, around
3 p.m. or 4. I can't really remember the exact time, but it did the same thing.
3 p.m. you said?
I think it was around 3 or 4 where it got to 1795 and it just slammed, came back up a little bit, and then around 7, I think it just slammed all the way down. It started to fall yesterday. Agent session.
Yes, that's like the whole understanding, like this is all the trade's really going to go up to. So if you're looking for a scalp opportunity here and you took that scalp opportunity, then realizing that this is all the trade's really going to go up to. So now you start identifying, well, if price breaks, this is the previous support area. So if price breaks that, chances are it's coming right back down. So that's probably where you want to be trailing your stop loss, like right underneath that, or closing partials or something like that, and managing your risk. All right, we got a minute left on this 15-minute candle, so let's see.
Yeah, this is great. You just creating that high, nice little range, come down, form a bottom wick, or form a support. Take this thing out.
Yep.
I never actually marked my chart off on MetaTrader.
All right, any specific questions or anything like that you guys have for us on YouTube or even here on Zoom? Anything you want us to go over while we're waiting?
This 156 support is beautiful on the 4-hour.
Yep, right there. I'm personally going to wait until 156, the 650 area is broken for any sort of trade opportunity. And it's simply just so we could just let it run.
Yeah. Yeah, 1 hour looks good too. 1 hour looks pretty similar to what it did last time, where we could end up getting, doing that. Something very similar to what we had previously. Get this high up here, consolidate a little bit, and start breaking out.
Yeah. Simply just grabbing orders from there. So even if we break above it, maybe just like a huge bullish momentum to the upside is very possible. And then you get a pullback and then a continuation back up.
100%. Chris, hitting the channel with the fitness?
Yes, sir.
Hey, what'd you do this morning?
This morning I did like a hit workout, high intensity interval workout. So I did it. It was like a 20-minute workout. Consisted like push-ups, pike push-ups, abs, those type of drills. 6 inches, flutter kicks.
Let's go, baby.
It was tough, but I got through it.
Awesome. Hey, Jaden. Oh, this is GJ. Jaden sent a chart into the group. What do we got? Data coming up?
It just moved, like Sharma said, it just moved gold on the 5-minute, and then it's rejecting at 1795 once again. So,
okay.
All right, we got the durable goods trade balance, and the prelim wholesale inventories. So inventory is increasing again. Usually you want it less. Less inventory means things are being sold by wholesalers. And the durable goods, nothing much has changed. Just 0.1%, which doesn't make a huge difference. So this is last month's information.
September.
And then after that, you don't have pretty much anything else coming out for the rest of the session. And so if all of this is just going to be from a technical way. So there you go. You made that bottom wick rejection on the new 15, and we're continuing back up bullish. So that could be a potential trade opportunity to the upside coming up to 156,600.
Yep.
$20 pips or so, coming up to about 25 pips. But understand that this is probably the furthest this trade is going to go, given this is the 15-minute time frame.
I'd rather not buy up here. I'd rather wait for a better price to get in. If we create this top wick on the 30-minute and then start rejecting that area and come down to hold that support, that's where I'd rather get in. I don't want to, because you got to ask yourself where your stop loss is going to be. And if you put your stop loss down here, right, and this is your target up here, you're sitting right in the middle of that. I'd rather just get in at a better price right over here.
Yep.
With your stop loss below that candle, or maybe even if we close and hold support right over there, you get a closer support for a closer stop loss.
Yeah, so there's that, and then let's say you were taking an impulse trade here to the upside, right? And so if you can break these highs, so in this case what we're doing is look at the wick rejection. We're rejecting right into that previous resistance area right here. If you have enough volume, that's the only way that you can take this trade. If you have enough volume to clear out of, this resistance area, your stop loss could be right underneath this candle. It's going to be pretty tight, or even down here. It's going to be pretty tight, but you need to see the volume kicking in. Right now, you just broke the previous high, but you don't have that volume kicking in. Now what we're doing is just kind of fluctuating in this area. We're not breaking the candle's own high or the candle's own low.
Just think of you're in business right now, and we always talk about like creating a trading plan that acts like a business, but your mind has to act like a business where you don't want to get in at this price up here when you can buy this product down here.
Yep.
And if the product just takes off, it takes off, and you'll buy another product for a better price. It's the same exact thing. So, you don't want to buy when you know that you can get a discount on Black Friday when it's November 22nd.
Yeah, and that's a good thing about Forex, that you're going to make money off of buying it or selling it. So it's not like stocks.
Exactly.
Right?
Exactly.
Let's check up on gold real quick. So kind of just hanging around this area.
See you later, Amon. I think Amon left 2 minutes ago.
Yeah, there you go.
Rejecting hard.
Yep, rejected, and then continued right back down. So now the chances are you're going to be just stuck in this area for quite some time until we finally get enough momentum to the upside. Let's see if we have anything else coming out the rest of the week. So tomorrow you have the GDP coming out. You also have interest rates from Euro coming out, and then we also have unemployment claims like every week. So tomorrow and Friday you have the price index.
CPI. I think it's gonna move. Well, that's what I'm really waiting on. I was waiting on Thursday. Yeah, CPI.
CPI is big, but PCE is really big too.
Okay. Oh, maybe I'm saying it wrong. I'm talking about USD at 5:30 a.m. on Friday. Am I saying it right?
Yeah, that's PCE.
That's PCE.
PCE. Okay.
Yeah.
Very similar, but it's 2 different data points.
Yep.
Okay. Yeah.
So we got a question on YouTube. How do you realize when there's enough volume in the market to support your trade? So here, for example, when this candle started forming, it started breaking the highs, right? But I'm looking at where is the candle rejecting, which on the 30-minute was, actually let's just go into the 30-minute, which just was that resistance for this break and retest. If I see that the candle starts forming and it's kind of breaking the highs, but it's just fluctuating in its own range like it is right now, and it's already been like 5 minutes since this new 30-minute candle started forming and all this type of stuff, in this case, you already know that there's not enough volume to continue pushing. So now there's this, every second of the market, there's buyers and sellers, right? So in order for you to take a buy opportunity, someone has to sell that to you. In order for you to close out your sell, someone has to buy it. So every second, there's buyers and sellers in the market. This is that indecision that the candles are literally showing you in the market. That's that indecision between buyers and sellers. So you pushed up bullish, came right back down as the sellers kicked in, and that's kind of what you're sitting in between right now. So right now, there's no volume. There's just uncertainty between the two. You determine that there's going to be volume when you start pushing up like this. So in this candle here, for example, as we were watching and we were talking and we we're like discussing a lot of different things, this candle just kept pushing up bullish. It kept breaking its own high until it came back up here and closed. So that's how you determine if there's going to be volume or not. Same thing if it was to come back down. it needs to break its own low and it needs to continue pushing down. This formation is just indecision.
You'll get a nice little illustration on the 5 minute and see how price is reacting to that area to the left.
You haven't really used the 5 minute time frame for pairs, like to actually trade, unless it's gold during like CPI.
You're saying yourself?
Yeah, I've never.
GJ is the one pair that you can.
Yeah.
That it does come in handy.
Mm-hmm.
Other pairs you really don't need it. I mean, if you want to take a look at them, you can, but GJ is the one actual currency pair that 5 minute sometimes comes in handy. I like using it to see how price is reacting off certain levels. I'm not going to take a trade based on the 5 minute.
Yeah.
I'm going to take a trade based on the 15 and the 30.
Mm-hmm.
But you drop down to these lower time frames to see, okay, get a key level of a support and a trend line meeting up. How is price bouncing off this level?
Yep.
That's what you use these lower time frames for.
Hey VJ,
Yes.
quick question for you. Looking at like on the GJ 5 minute right now, not to use it as a confluence or anything like that, but I'm just wondering just how it's set up literally right now. Would you consider that a break and retest, like the bullish candle followed by the bearish candle, and then we see the bullish candle forming right now?
Mm-hmm.
Because that bearish candle that has the top wick, would you still consider that a break and retest, or would it only be a break and retest if it had a bottom wick that was rejecting the area that it just broke?
No, this is also a break and retest because let's take a look at what's going on here. It's break and retest if this candle closes bullish. So let's take a look. What I'm doing is it's from the candle close to that bottom wick rejection on this 5 minute candle. Look to the left, you got that rejection right up top here. Look to the left, you got rejections here, right? So this is a level just on the 5 minute time frame if you're just analyzing this. So just on the 5 minute time frame, like any other time frame that we would be analyzing, this was support. You got rejections as a resistance right here where you rejected the buyers. You broke above that, respected that area as support. And so now if this candle continues, this would not be your entry candle. Or like personally for me, this would not be my entry candle because this candle did not break the high of the previous. Right? Mm-hmm. So if this candle here, for example, here I would need to see a bottom wick rejection. After this candle closes bullish, I would need to see a bottom wick rejection here, and then this one to continue bullish and break the previous highs. If it does that, then that's a potential buy opportunity. Or else, you're pretty much just stuck in this range. Unless price comes right back down to this level down here that Stefanos is looking for a retest at.
Those are my conditions. That's the only way I'm going to take this trade. This does make sense, though. Price breaks above. It's just like, I just don't like doing that. You know, it's kind of against my rules. But it makes sense. Like, if we do hold the support right over here and start breaking the highs of these, you get some volume coming in around this time, right before 9 o'clock, this thing could take off.
Yep.
That's why we're all adults in here. We all take our own trades, but we try to give you our best advice.
So you would do it the same exact way that you would do it on any other time frame. But again, now you're on the 5 minute time frame, so your strategy that you're using on the 15 and 30 minute, like it wouldn't work on different pairs the same exact way. It's not going to work on the 5 minute time frame the same exact way.
Hey, when you're visualizing the volume, and we were looking at that 30 minute candle fluctuating in its range, right? When you're saying with volume, when you are viewing it and reading it, we want the break and retest, or we want a bottom wick rejection. But in other words, with volume, then I would want to see the candle breaking its own wick in either direction.
Yep.
Is there another way that you would, I guess, have some sort of indication I don't know if you want to say beforehand, but is that what you're looking for mainly?
Yeah, so like if you were to visualize, I'm going to try to draw we will see how that works out. But let's see. So let's say, for example, you have your candle, right? It starts forming. So if it's just doing this, that's not volume, right? If it's just fluctuating. If it starts pushing, and then let's say it fluctuates a little bit and it creates like a top wick, and then it starts pushing a little bit more, breaks its own top wick, comes back down a little bit more, and then breaks its own top wick, that's volume because it's breaking its own resistance levels. If it's just doing this in this little range for like 5-10 minutes, that's not volume. That's indecision happening in the market. Does that make sense?
Yes. That was a good visual.
All
You
right.
can actually draw the candle and we can enter. No, I'm kidding.
That'd be the best, right? No losses whatsoever. Yeah, so this is that indecision. So we have another question. Do most, parentheses not all, fundamental news releases just create blips in the market that eventually course correct? If so, how do you balance technical and fundamental analysis? So when news comes out, for example, when the annual budget was coming out, right? We saw that optimism kicking in. When did that annual budget really come out? They started talking around 4:30, and then once that was over, this is where we saw that optimism kicking in. What were they talking about in the annual budget release? We just looked at the article where they were pushing a positive sentiment. So that's what that volume is kicking in, right? So that's that fundamental news release that just came out that caused that momentum to the upside. So that's what I'm looking at from a visual way. The driver is fundamental. Technical analysis is just a visual representation of that fundamental analysis. And so when it's pushing up, and yeah, eventually this is going to get corrected because this is what we're seeing on the next 30-minute candle as we're pushing down, right? We're going to correct this bullish momentum, and then if this is held and then continuation up, then that driver of fundamental analysis of optimism is what's going to take us to the upside. But the whole point is every second there's buyers and sellers. So if all these buyers push the price up, there are still sellers during this time who are looking for sell opportunities. All we're doing now is just taking the sellers out. And then as the next candle continues bullish, then that's where the buyers are kicking right back in and taking price to the upside. Does that answer your question?
Get my dog down here. Nagging. We're getting that rejection on gold.
Yep. Came right back down to 1790.
Yep. This might be a good play on DJ, guys.
Mm-hmm.
Just want to stay patient. I'll let that FOMO kick in. I think Jen liked my what do you call it? Solution for FOMO.
Yeah. And then we have another question. So would you take buys if, for instance, a 15-minute candle closed bullish above a 1-hour resistance, but was still below a 15-minute resistance? Because 15-minute candle bodies are usually just wicks on the hourly. I would wait. Okay. Yeah, so I would wait for price to continue bullish right here on, let's say, at this point, if I'm looking at an hourly resistance, here for example, if I'm looking at an hourly resistance here, I'm going to wait for at least a close on the 30-minute time frame. I'm not even going to drop down to the 15-minute time frame. If I see a 30-minute close here, and then the next 30-minute makes a bottom wick rejection, which on the 15-minute would translate as a break and retest, then yeah, that's a potential scalp opportunity. But if it breaks above an hourly resistance, I'm not going based off the 15-minute time frame.
Mm-hmm.
You would do the same thing, Stefanos?
No, I was just agreeing with you. Like that's why you check multiple time frames over there.
Mm-hmm.
See, this is what I was talking about before. This this area right over here. Mm-hmm. It is the 15-minute, but I knew we were gonna get like some kind of a trouble. Like if we were to take this impulse entry as we broke the high of that 15-minute, right? Expecting that volume at 8 a.m. or wherever that was.
Mm-hmm.
Yeah, I'm looking at your time down here, and I just got so confused. But if you did take that impulse entry, maybe you're only looking to get 3, 4, 5 pips right over here, knowing that you're going to secure up here knowing that price is going to come down and retest.
Mm-hmm.
Maybe just wait for this retest like we're doing right now.
Yep.
Wait for that support to form and then take this out. Also, what I like is the fact that this low right over here is lower than this one. So that tells me we got a little bit of a bullish momentum. Even though it's the lower time frames, it still helps.
Yeah. It's the same exact thing regardless of the time frame. Don't be married to the candle formations. Be married to understanding what's happening in the market and the structure.
Only difference is time.
Yeah.
All these candles are the same. How much data is in each candle?
Yep. So this is volume. See how it's breaking its own low? And it's pushing down. That's volume in the market. What price was doing here was not volume. It was just fluctuating until finally the sellers took over and closed. It's breaking its own low. And it's continuing. There you go. So that's what volume looks like, whether it's bullish or bearish. Same exact thing. If this was a bullish candle, it would be pushing up, kind of fluctuating, but then it would continue to break its own high and then continue bullish. Chris sent a message, but I think he accidentally sent a direct message. Yeah, he was like headed out for the drop-offs. Thanks y'all for this. See you tomorrow, Stefanos, and then see you next week, Sharma.
He's pumped. He had a great podcast with him yesterday.
That generally makes me happy, seeing like people actually succeeding in this, and then them coming to the realization of like, yo, this works. I just had to make a few minor changes.
Quick rundown, like this podcast, I don't know if we're gonna release it. Whose podcast are we releasing this Wednesday? Is this gonna be Harrison?
Yeah.
Okay, so and then next Wednesday is gonna be Chris, and wait till you hear this podcast of like what he's able to do with his profits right now. You know, he just proposed to his fiance, bought the ring with some of his trading profits, going to Disney for the first time with his kids. A lot of different things that's coming to fruition for him, and it's just from hard work. You guys saw him, like he was one of the only guys with the video on, and he's waking up early in the morning, posting on our fitness channel, working out. Then he gets on the train to go to work in like 45 minutes. He's on the lives with us, teaches all day, but during his lunch break at work, he's back testing. Mm-hmm. And now it's all starting to cut. Like I think he made like $2,000 last week. Like it's all coming together for him, and it's just with that hard work.
Yep.
Never giving up, understanding that this is a process, being patient with the process, but impatient with the work that you put in. Mm-hmm. Knowing that like each second counts, every minute counts, and you can't let anything go to waste.
Yep.
It's like a sense of urgency.
It depends on how much work you put in, right? So, for example, like we give like sports analogies, right? So if you're playing a sport and all you do is show up to practice maybe, once a week or once a month, are you really expecting yourself to be as good as LeBron James? Right? Mm-hmm. It's not going to happen. You need to put in the work like LeBron James to become like a LeBron James.
Yeah.
Right? So 100%. If you're expecting to just come onto the charts and then, if you're in a mentorship or you're watching like live streams or you're on TradingView live, whatever you're doing, but you're not doing your own analysis, if you're not trying to compare your own analysis to what other people are showing and trying to understand what's happening in the market, trying to understand like why are certain levels different for us, or how do they see the market differently than I do, and how can I improve, then how do you expect to become a profitable trader?
Mm-hmm. Again, the analogy we gave last night with the doctors, the lawyers, people spending 10 years in school and hundreds of thousands of dollars on education and going into debt just for this. And people think they're going to step into the market and just start making money without putting much work in. It's the hardest market in the world.
Yep.
Biggest market in the world.
100%.
It doesn't happen like that. And that's not to discourage you. It's just you got to put work in. That's it. And you got to make the work enjoyable. Mm-hmm. You got to embrace backtesting. You got to embrace journaling. And just get in the zone. Put music on. Throw your phone on the other side of the room. Don't let that distract you. and just get an hour of back testing in every single day. You don't have to kill yourself 4 or 5 hours a day like I was doing during COVID. I had nothing to do, so I was just on the simulator all day. So all you need is an hour a day, 7 hours, and give yourself weekly deadlines that you got to hit every 7 hours of back testing. You tally it every single day. If you don't get it in on Monday, you got 2 hours to do on Tuesday.
Yep.
All right.
100%. So it seems like for both of them, we're kind of just hanging around.
Yeah.
Gold is just stuck between 1795 and that 1785 area.
I'm thinking, I'm wondering if GJ is going to be a fake out over here.
Oh, it is. You just had that major top wick rejection. So same thing. We're probably going to end up something like this. Right? They created support. We pushed up. It's kind of like a doji. And then finally we had some like volume kicking in towards like Asian session. So there's a very high chance that we might just end up doing that because there's no other news coming out for the rest of the session. At least today. You have the Canadian interest rates and things like that, but that's not going to be affecting GJ.
Yeah,
so,
Andreas, that's a great point. I'm sorry, Sharma, were you still going?
No, go ahead.
Oh, okay. No, I was just replying to him. And I always like to use the analogy of like the fact that you guys are all sacrificing time right now, sacrificing time away from family, friends, activities, sacrificing time away from, like, let's say you guys are a little bit younger, you're playing video games. Instead of playing video games, you're sacrificing that and back testing instead and using a simulator as your new video game, right? But the longer that you take right now, where as far as like sacrificing now and actually sacrificing now instead of just getting distracted or whatever, you're losing the time where you get to enjoy the fruits of your labor.
Yep.
Right? That time is shrinking down and you're extending the time that you sacrifice or kind of sit in purgatory. That's probably the best way I could say it. It's where you're just kind of like, some of you think you're putting work in, but you're not. You're not putting as much as you think you should be, or you should be. And that starts to weigh on your confidence a little bit if you're not putting as much work as you should be.
Yep.
But that time you want to be able to expand that time that you get to enjoy those fruits of your labor.
All of this becomes a lot easier. Like right now you're sitting here and you're doing this analysis. Like I'm looking at this and I can tell 100% that I'm definitely not going to be taking a trade for the rest of the session.
Yeah.
And the reason why is because I'm looking, that's why like you see me hopping around on different time frames. And the reason for that is because I'm trying to see, well, what's happening across time frames. So in this case, you just came right back up. I'm looking at where's that wick rejection. That wick rejection was right into that consolidation area, right? And then what happened as soon as we rejected into that, to see that, we're going to have to drop down to lower time frames. You just had a nice sell-off that just happened. Now we're coming back into this minor area here, this entire range. We're going to end up doing, most probably, we're going to end up doing something like this. The only time that this move came in was from Asian session, right? And then you had like some Asian session news coming in, which is obviously going to be affecting the yen, and then that's where you had the momentum, right? But if price fails to hold this support area, I can already tell that we're probably just going to be consolidating here. So early on, let's say, 2, 3, 4, whatever years ago, that Sharma would have been like, I'm just going to stay here for another 30 minutes, an hour, and I'm just going to look at what's happening here because there's still a potential trade. And now, after those years and watching this happen over and over again, you could just tell and you can pick up on what's actually happening in the market, and you could tell this thing's just going to consolidate if the support is not being held. So if in the next 3 minutes, if this support is not held and the next candle does not continue up, then there is no scalp opportunity for me. But I'm still not looking to enter unless price can break above 156,600, but that's just an example that I'm giving you guys if you're looking for a scalp here. And then even your analysis becomes easier too along the way, where if you're spending 30 minutes or 20 minutes or an hour maybe even trying to do a top-down analysis, eventually it's going to get a lot easier and you're probably going to just end up spending 15 minutes, 10 minutes, maybe even 5 minutes. How long did it take you in the beginning, Stefanos?
You really start to realize all that?
Yeah, like when you started doing your analysis from higher time frames and down.
I would say probably like 8-9 months. That's where everything really started to click for me. Like 7 to 9 months. In that time frame, I was just like, okay, like this is what I need to do, and especially with the discipline as well. I mean, the discipline came in right away, and obviously you always have issues with discipline, little spurts of a lack of discipline. But in the very beginning, I realized, if you guys have watched our podcast, you'll know why I realize how important discipline is. You really start to dig into that. Make sure that that's number one. The skill set is number one, not money. Everything starts to click.
Mm-hmm.
And again, right around 7 to 9 months is where I really started to realize that as well, and really started to understand the way GJ moved.
So by that point, like, let's say, how long did it take you to do your analysis in the beginning? Like 15 minutes, 20 minutes, 30 minutes?
Yeah. So obviously you have issues with levels in the beginning. I think a lot of people do. A lot of people that come into the group, one of the first things they're trying to understand is where to mark their support and resistance. With me always having discipline in my personal life, I knew that I had to back test right away and really study my pair, really get into this, throw everything away and make sure I'm focusing on this right now. So that maybe took like a week, where the analysis was a little bit longer. I would also imitate or look at somebody else's analysis, like Brett Keel or my previous mentor, and see if that made sense to me. And then I would bring that and erase that or get that out of there. And then I would look at my own chart and start marking it up myself.
Mm-hmm.
And then again, after like a week of doing that, it really starts to click.
And then you decrease the time down to like 10 minutes or so?
Yeah, I would say. I never really timed it.
Yeah.
Now it really only, I know what the higher time frames are doing. I do it almost every day,
mm-hmm.
actually every day. And, you just get down to the lower time frames and you just mark up levels, look at most recent support and resistance, look at, how those levels are reacting in the past, or have they reacted in the past, and you go from there. But don't use my time frame as like a template. Like I need to be, at that same exact point. Like everyone's got their own timetable, mm-hmm. but at the same time, you want to understand you gotta put in work in to get to a certain time frame, or if you want to trade full time by this time, that you need to put time in. Don't let that rush you as far as over trading or over risking, but let yourself understand that you need to put a lot of work in early on and very frequently to get there.
Yeah. So the whole point is, it's just going to get easier. The more,
mm-hmm.
You do it over and over again, the easier it becomes. 100%. Yeah.
100%.
So right now we're holding on to that support. This is the New York Stock Exchange open. So this is that 9 a.m. if you're on the East Coast, or 6 a.m. if you're on the West Coast here. So we had that close right at the level, and now we're starting to push back up, right? So now if you drop down to the 30-minute, you need to see the volume kicking in. Now that bullish volume that we were talking about, and we just saw an example of it too. So we need to see that happening, and then price continuing bullish.
Yep. Now, if this support holds, we call this to the T.
Yeah.
It's a good opportunity for you.
Should we even bother looking at gold? Nothing's just consolidating.
Yeah, like I said, I haven't traded gold in a couple of weeks. Like I normally do a full week review of.
Mm-hmm.
I haven't had the chance to do them as much as I want to, but normally do a full week review on GJ and gold. Like I actually just made a video on the course about it.
Yeah.
But with golds, you really just don't even need to. Like I'm not concerned about grabbing these little scalps through gold when I have a pair like GJ.
Yep.
I used to have EJ as well, but I want to focus on GJ and gold.
Mm-hmm.
You only need 2 pairs.
100%. Another thing that I was looking into yesterday as I was doing my own analysis was to compare. Now it's been a full year since like the whole Brexit thing went down, right? When we actually started doing those outlooks and we started like talking about all that type of stuff. And so, actually, yeah, we started the outlooks on Instagram, I think, around that time. And so I was comparing the fundamentals from that time of the year and now as we're coming right back into those holidays again. And the fact that there's still post Brexit consequences, there's still that back and forth that's going on between the UK and the EU, right? And so what does that look like from a technical perspective as those fundamentals are coming into play? And so if we go back up to, let's say, the weekly time frame or even the monthly time frame, let's do the monthly time frame. So that was that entire like pullback. You got that support being made that entire 2020, and then finally we started pushing up around this time, right? We started pushing up that entire like the holiday times and then going into the new year. And then that's the same exact thing that's happening this year, where you had that nice little pullback getting a support, and now we're starting to push right back up into these areas. So are we going to end up mimicking this entire bullish move up as more fundamentals continue to come out? And then what do you need to see on lower time frames for that to happen? Right? So obviously you need the lower time frames to start aligning as well. So we're coming right back below that zone. So there's a very high probability that for the rest of the session, we're just going to end up consolidating in these areas.
Mm-hmm. I'm wondering if we could end up retesting 156. And maybe retesting that low after reacting to the area. If you zoom out a little bit.
On 30 minute?
Yeah, even more. This whole area right here, if we end up rejecting this area and then coming right back down to retest this level over here after the fake out.
Mm-hmm.
Could happen.
Yeah.
But I've seen so many times that these fake outs were also in this bearish trend over here. Right? Lower lows, lower highs. Maybe we end up consolidating in here, tapping this area and then continuing down. But 156 is such a strong level over here. So we gotta see where price takes us.
Yeah, there's a very high chance that it's probably not going to do anything until even Asian session, if these levels are not held, where we're already breaking the lows down here. So even here, for example, if you come onto the hourly time frame, do the same exact analysis on different time frames, where you have that resistance that's being made right here by these three candles, right? And so now you can make that bottom wick rejection right into that resistance, and then this candle could flip bullish and then continuing back up to, let's say, 156,600 or even 156,700. So you have that entire bullish momentum to the upside. But if that doesn't happen, and even this hourly candle just closes bearish here, there's nothing happening until Asian session.
Mm-hmm. Sharma, how long did you want to go on these?
Honestly, we're just gonna end up consolidating here anyways, so there's really nothing much else. But I was saying like around 6:30 or so, so like until 30 minutes into the NY New York Stock Exchange. But today nothing's really gonna happen, so there's no point of even just waiting. But hopefully, so obviously there hasn't been a trade opportunity, a clean trade opportunity that would allow you to have runners in this session that we just had. But hopefully there were other things that you guys got to take out from this session in our conversation. So we're gonna do this.
Psychology stuff.
Yeah, and so we're gonna do this every Wednesday, same channel, SharmaFX here. And if you guys have any questions, feel free to reach out to either of us, or if you're on the live session here, then you can also put that into the chat, and we can answer the questions for you.
100%.
Other than that, see you guys next week.
Thanks for coming, guys. Hope you got